So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Cattani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcattani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Cattani, and I'm joined today by Zach Haptonstall. Zach is the CEO and co-founder of Rise48 Equity. They're a multifamily investment company based in Phoenix and have purchased over 850 million multifamily properties and have completed over $1 billion of transactions since 2019. They have over 100 full-time employees. Zach, welcome to the show.
Hey, Jonny, thanks so much for having me on. I really appreciate it and look forward to the show here and provide some value for the listeners.
Absolutely. Very excited as well. Let's rewind a little bit as we do with all of our guests. How did you get into this? Where did you start?
Yeah, so I really had no background in real estate. I was born and raised here in Phoenix, had a journalism degree. So I wanted to be a journalist, a sports reporter. Then, realized that wasn't going to be for me. You really can't make any money doing that. I had student debt, went into healthcare marketing. I needed to make money, working in the hospice industry, became a marketer, director of marketing, and then, president and co-owner of a large hospice organization, got my MBA. So I was, fortunate to be making good money at a young age. I come from like a lower middle class family. And by the time I was 23, I was making six figures, making more money than both my parents combined. And so I was fortunate to do well, paid off all my school debt, got my master's degree, paid that off, bought a house. By the time I was like 26, 27, I was making like $200K a year, had no debt, and just felt like unsatisfied, felt empty, almost like I wasn't happy with my job, and knew nothing about real estate. But, I knew I wanted to create, more control of my time. And I started to learn a little bit about it just by, different things I had heard from people. And so January 2018, I resigned and I sold a little bit of equity I had in that company. And I said, okay, I'm going to just live off savings and figure out how to create passive income somehow through real estate. I didn't know what it would be. It wasn't necessarily multifamily. It wasn't syndication, but I was looking at potentially flipping homes at first. And I realized, no, that's transactional. That's exactly what I was trying to get away from. And then I looked at mobile home parks. I started cold calling mobile home park owners and making offers and trying to get a deal on a seller carry with my own money. Because I had almost 300K of cash that I had relentlessly saved over those four and a half years or so, and got a pop from that equity. And then ultimately I landed on multifamily. And so I basically, just started listening to podcasts like this one, Jonny, and reading books and going to meetups and conferences, and figured it out. Long story short, it was 14 months when I quit the job to getting the first property closed. It was a 36 unit, $3.5 million deal. Just me and a few other people. We all put in big chunks of our own money. I put all the money I had left, I put into that deal. And then that gave us momentum and experience to then start syndicating deals and get that momentum and kind of carry it from there. And so that's kind of how we got into it.
Awesome. That's a great story. And I love that you kind of just went for it. That's kind of my story a little bit too. I was more laid off because of COVID, but
Sure.
yeah, kind of similar. So when you were first starting out, did you have any idea you would get to this point? Was that kind of a goal of yours?
No, it's crazy, honestly. Like it seems like so long ago, and like we've gone through so much, but when in hindsight, it doesn't seem that long ago. Like it's been just over 3 years since we closed our first deal. And now, we've completed over $1 billion in transactions. We have 100 plus employees. It's kind of crazy to think about in hindsight. But I think, from the beginning, I wanted to go full speed ahead and, was never satisfied. So even when we had the first under contract, I was looking for the next one, you know what I mean? And while we were under contract for the first one, I knew I was out of cash. So all my money was going to that deal. So I sold my house. And, I had made like 120K from that because I needed earnest money. The week after it sold, I wired 100K non-refundable into another deal. So I was always all in, you know what I mean? Trying to scale this thing quickly. And I think, on the front end, like with any business, it's really tough. You face the adversity, but then once you start getting momentum and and you can keep it rolling. So we've been able to build up the infrastructure. Now we're vertically integrated with our own property management company, really help to, really make robust operations possible.
I love it. That's awesome. So in the beginning, obviously, you had a few partners. Are those still the partners you're working with today?
They are, yeah. So Bikram and Sandu, Robert Shefchik, those were my partners in the very first deal. We had a couple other people that we don't work with anymore, but those were, the primary people really. And so Bikram's our CFO here at Rise48 Equity. Robert's our chief construction officer. And, before I even met those guys though, I had quote unquote dated several different business partners, just trying to underwrite deals, make offers on deals. And, really found that I meshed with those guys. Fortunately met them before we bought the first property, because you can easily buy a property with people that you don't want to be with long-term. And we've been very fortunate to find each other and really organically carve out our roles. It's allowed us to scale the business.
What's been the keys to kind of understanding, what roles you guys fit best in?
Yeah, I think in the front end, like I was saying, like the quote unquote dating process of finding business partners, there was like 7 or 8 different quote unquote business partners I tried to work with, and I started to realize, okay, some people don't want to work as hard as me. Some people are not communicative. I can't get a hold of them. I had one guy who was very experienced, thousands of units, but then he's not doing anything. I realized he just wants to use me, for the hustle. I had another guy, we got along great, hard worker. We had a nightly phone call for about 2 months. Then I realized, we have the same skill set. I need a complementary partner who's truly high level financial analysis. That was Bikram. So the key is to finding your complementary skill set. You need to identify what do you like about the business, what are you great at doing in the business, and then identify what your weaknesses are, like what you don't want to do. So I underwrote the first few deals just because, the first few deals we bought, I underwrote just because, I was kind of overseeing everything. But, as we started getting going, I realized, okay, Bikram is much more high level than me. He's got an economics degree, CPA, worked at PricewaterhouseCoopers. He likes doing that stuff too, and he's good at it. I'm not. I don't like doing it, and I'm not good at it. And so you have to find those complementary partners and those skill sets. And then as you're going along, if you have, competitive partners, competitive in a good way, you're going to push each other to continue to improve the business. And you're going to have to make sure you hold your weight too. You're almost holding each other accountable. But you're also going to have to, have personality types that mesh, so like I'm like very type A intense, and Bikram is an elite worker, but he's more laid back, and whereas if I had another alpha, then it probably wouldn't work because we might clash a lot. Robert is the same way. He's very laid back, understanding, and things like that. So I think you need different personality dynamics and you need different skill sets in order to have, a truly valuable partnership. And it takes time to identify that, and it takes time to develop it too.
Absolutely. Yeah, you made a lot of really, really great points there. And so what's your unique ability? What is it that you identified was, okay, this is what I'm going to focus on?
Yeah, I think initially on a high level, it's kind of putting everything together, so like I was basically finding the deals with the brokers, raising the bulk of the capital, communicating with our counsel, lenders counsel to get these deals done, on the front end of the acquisitions. And so really, acquisitions, dispositions, sourcing capital, forming partnerships are what I try to focus on. And then also, just like the high level vision of how can we improve, what can we do to get better, and then managing the people, managing, especially now when you scale as quickly, you have over 100 employees. It's important to identify other leaders who are managers and directors in your company who can oversee these departments. And at the end of the day, the buck stops with me, so if I'm not leading by example, then it's going to trickle down to these other managers and directors at our company and our executive leadership team we've hired. And it's going to trickle down to the lowest level at the company. And so I think those are very important things. But Bikram, for example, is basically doing everything back office, everything in regards to operations, asset management, overseeing the finances, and holding our asset management team accountable so that we ensure that these business plans are being executed. So equally, if not more important than what I do, and so you have to have those different components to it. And then Robert is overseeing all the construction. And all 3 of us are raising capital, so we all bring value in that regard. All 3 of us are signing on these loans, but Yeah, I mean, it depends where you're at as a business too, right? When you're starting out, you might only need one or two other people, and you guys are going to do everything. That's what we did. Like we did literally every little minutia detail you can imagine. I'm out at the property chewing out vendors and trying to make sure that they're getting stuff done. I don't want to have to do that stuff, but you have to do everything in the beginning.
Absolutely. And then eventually you kind of start implementing those systems and putting the right people in place. So in the beginning, you guys were kind of, you've scaled very quickly, obviously. What are we talking, like really 3 years? What has been the key to, to do that? Obviously you can't keep bootstrapping it. So you're bringing investors. What's been the biggest key for you guys to find investors as quickly and jump right in with you guys?
Yeah, good question. So I think it's a combination of things, and we're exponentially increasing our investor demand almost every month. So it's kind of crazy, but I think, initially it's hard to get into this because you don't have a track record. I was able to leverage, some of my past network in healthcare, to get like physician groups, things like that. But that ultimately didn't make a huge impact initially because you don't have a track record. But I think, one thing that we've been able to do is we've been able to identify and source very good deals. So we have very strong broker relationships. So most of our deals are off market. We're getting the first look from the top 5 or 6 brokers on most of these deals in this market. And so we're finding deals at a good basis that are truly good deals. And then operationally, we're executing, as efficiently, if not better than anybody in the market, in all humility, from what we see from results. What that's leading to, my point in saying that, is we're having very high velocity investments where we're selling these deals in a year or two and, meeting or exceeding our 5-year projection. So when you're going full cycle on these deals, investors start to see that, right? And that's when you're starting to get flooded with investor referrals. And so we're getting a ton of referrals from past investors who are referring their colleagues, their friends, their family. These are primarily high W-2 income earners and business owners. So you got like physicians, engineers, IT consultants, software salespeople, all across the board, all across the country. And then, my wife, Grace, she's our VP of marketing. She does a really good job with online marketing. And so she like runs my LinkedIn, and we're constantly putting out content. We invest in SEO, we invest in Google ads. So there's a lot of different ways that we're getting these leads, through referrals and things like that, where we're just exponentially able to raise, more and more capital. And we've intentionally, the 3 principles, we've built out our infrastructure so that we can delegate a lot of the operations. We're overseeing this thing or having meetings every week with our staff to oversee operations, but we're trying to free ourselves from being in such the nitty-gritty details operationally so that we can focus on talking to investors, and finding deals and make ourselves available. Because ultimately these investors want to talk to the decision maker, and they want to know that they have that relationship and accessibility. And that's really important to us too. And so, it's just been a combination of those things where it's like, it just kind of feeds itself. It's like, if you're going to do really well on a deal and you're going to sell it quickly, then, you're going to get more investor referrals. And so what we've been doing operationally is making sure that we're scaling responsibly and been very proactive, hiring people well in advance of when we even actually need them full time. So we'll try to identify, okay, in 3 to 4 months, where are we going to be? We'll hire people 3 to 4 months earlier than we really need them. So like people that we're hiring, we may not even have 40 hours a week of work for them yet, but we know we will by the time they get fully trained, implemented, and ready to go and be autonomous. So yeah, it's a fine balance, right? Of, you have to find the deals, you have to raise the money. That's all front end, but then you have to actually perform. That's where the real work is done, and that's why we took management in-house. We're completely vertically integrated. We manage all of our own assets. We don't do any third-party management. We're only managing our own portfolio. We do all the construction management in-house. We control our supply chain completely, buying all of our materials directly wholesale. Wow. Through a warehouse. And so, by taking all these things in-house, we've been able to eliminate a lot of external variables that could, disrupt our operations. And because of our business plan and our criteria, it's a rinse and repeat process. We're buying the same type of properties. We do the exact same renovation scope with the exact same materials on every property. So we're just basically buying in bulk, and cranking through these business plans, rinse and repeat. And at that point, it just comes down to systems and processes, like you mentioned, Johnny, and also, just making sure that your logistics are on point. So that's kind of how it's happened. And now that we have these resources and systems and processes, we can, start to scale even more because we have more staff and more bandwidth.
I love that. You made so many excellent points there, and you guys are only in Phoenix, which is incredible. Obviously, one of the top markets, if not, probably it's got to be top 3, if not number 1. So in the last 3 years, especially, that's been crazy with COVID, a lot of people moving down there. What's changed about your guys' strategy, if anything at all?
Yeah, good question. So, I mean, like you mentioned, Johnny, pre-COVID, Phoenix was already number 1 for population growth in the country, number 1 for rent growth in the country, top 5 for job growth. Since COVID, everything's accelerated significantly. Even more people are coming here. There's a ton of jobs, and there's literally a supply and demand issue in favor of investors and landlords in Phoenix. There's not enough housing for all the people that are coming here. And this has been a problem for years pre-COVID, but now it's exacerbated even more. And so, as far as our strategy, it really hasn't changed because, we're using the same conservative assumptions we were using before. It's just that the fundamentals, are accelerating a lot of things. I think our natural evolution, as a company has really allowed us to increase our influence in the market to where there's probably 5 or 6 brokers in the Phoenix market that control about 90% of the value add inventory. Okay. So between the $30 to $100 million value add purchase price space, we really are getting the first look at most of these deals, and it's a volume game, as Johnny, and across the country, you have to find a needle in a haystack for deals that make sense, but we're cranking through so much volume of deals to find these deals that are good ones and make sense and meet our conservative underwriting model with our stress test, that helps a lot. So I think, we almost have an unfair advantage now in the market just because we know the brokers, they know we're going to perform. Even on marketed deals, we get insight on a lot of these deals of where to be so we can win them. And so I think that's been a big key. But as far as how we approach the business plan, I don't think anything's changed in that regard. I just think that since we started, we've definitely changed how we approach the execution of the business plan, which was when we started, we were using third-party management. We were relying on the third-party management company to run the construction management process. When we had 3 different third-party management companies, since we started, and none of them can do it. None of them can stay on budget and on schedule. So before we even took property management in-house, we took construction management in-house, where our staff is bidding out, managing these vendors and construction crews on site daily, and holding them accountable. So that was the biggest key for us, because then we can really ensure we're staying on schedule and on budget for the renovations. And then from there, we then started taking the supply chain in-house, buying all of our own materials in bulk, controlling that. And then after that, the third step was bringing the property management in-house and controlling the operations, 100% vertically integrated. So I think that's what changed for us. But the way that we approach the business plan from like an underwriting perspective and our criteria of deals that we're looking for hasn't really changed. It's just the ways that we execute on those business plans.
Makes perfect sense. And that's interesting that you guys went construction management first. Typically, property management comes first, but you obviously saw a big issue there, and having that partner who could solve that problem is huge.
100%. Yeah, I agree. I think that, it might seem counterintuitive to some people, but in my opinion, you should have construction management in-house before you ever take property management in-house, because you can find, a competent third-party management company to run the operations, the leasing, the maintenance and evictions, marketing, things like that. But the most critical part, especially these value add deals where you need to renovate units, that's your business plan. The most critical part is the renovations and staying on schedule and on budget and managing those vendors. So yeah, I mean, that, in my opinion, for anybody out there, I think when you can control the construction management, you have more control over your overall business plan, and just that investment period. And then property management comes second to that.
Have any of these bottlenecking issues with supplies and that hindered anything at all?
No, it hasn't. And, I think we were fortunate that we were proactive, and like near the end of 2020, early 2021 is when we started buying all this stuff in bulk before those supply chain issues really started to hit, like in 2021. And so, we haven't had any issues with any supply chain or any inflation issues in all of 2021 or first quarter of 2022, because, we have a contract with a large warehouse. They're buying all their stuff primarily directly from China and Taiwan. Okay. As part of our contract, we're buying stuff at least 3 to 4 months in advance for what we needed. They're storing it in their warehouse for us as part of our agreement. And then it's drop shipped to our properties on our schedule. And we require that all of our construction crews use our materials. So we truly control that process. And so, we haven't had any issues with that because we're doing the exact same scope in every single unit that we renovate. The same flooring, quartz countertop, stainless steel appliances, brand new cabinet boxes. So we do like an A-class luxury interior scope. It's very high end, undermount sinks, modern plumbing pull down fixtures. But we buy it all in bulk. So we get that reduced pricing. And then, we don't employ the labor right now. So we do construction management, but the actual labor of who's doing the renovations is not our staff. So we have 8 to 9 different construction companies that we source, bid out, and manage daily with our staff. So our staff, we have our construction manager, John. He has 4 construction coordinators beneath him. So we have these 5 employees who are all on full salary, full benefits, just focused on walking units 40 hours a week, making sure they're staying on schedule and on budget. We have 8 to 9 different construction companies we use. All of them have several different crews. We feed these guys somewhat evenly. We distribute the work evenly, so that we're not too concentrated with any one company. So if somebody says, "Oh, I can't hit your budget," we say, "Okay, that's fine. You're fired. We'll use somebody else, and we'll get it done." And they'll say, "Oh, wait. No, we'll make it work," because we're giving them such consistent volume, of work that we can get that reduced pricing on the labor front as well. And right now, we have our construction manager, John. We're paying for him to get his GC license because we will start, a third company, Rise48 Construction, where we'll start to build out our own crews and start taking that labor in house. But that'll be a very slow process. We'll integrate our own crews. We'll still use, these third party construction crews because it just gives us bandwidth, and allows us to renovate, several. I mean, right now we're renovating 100 plus units a month. All that same interior scope. And we typically do, 10 to 20 per property per month. We don't do too many per month at each property because we want to keep the cash flow strong, keep the occupancy relatively high. But yeah, I mean, that's kind of the next step is going that route.
And are you guys familiar with all of your subs that you use and vendors in that?
We are, yeah. So we personally bid out and we source, bid out, and manage all of our own vendors and construction crews. So all of our roofers, plumbers, electricians, you name it, pest control, we're using the same few group of guys. So for every time we get a deal under contract, we go through DD, we have at least 3 or 4 of these different disciplines out there, and we've used all of them for work. So we know that their bids are solid and that they're actually going to hit the quote that they gave us, so that when we're creating our budgets for CapEx, we feel confident that we're going to hit that. And then we underwrite and build in significant contingency for both exterior capital item projects and interior renovations. Every single unit, we have a significant contingency built in there, so that in case there are any, crazy cost overruns because of inflation or supply chain issues, we feel confident we can absorb that. We have not had that problem, but we have a lot of cushion built in case anything like that were to happen.
Wow, that's awesome. So you guys, like you mentioned, you really just have it down to basically a science, is really, and which is why you guys have built up the name. And you're obviously very fund manager friendly, which we were kind of talking about offline. So kind of talk about how that came to be. The fund managers I've talked to that you've worked with have all said incredible things. Did that come from not being able to raise capital in time and kind of bring in other people, or where did that come from?
Yeah, good question. So last year we started a structure, called Fund of Funds, where this is actually a structure that our SEC attorney recommended to us. And, over the last, 4 years or so, we've had, various LP investors who, say, "Hey, I can raise money. I want to partner with you." And, it's not SEC compliant. You have to have an active role. We're regulated by the SEC. Okay. So everything we do, we have an SEC attorney who oversees everything, draws up all of our documents and everything like that. And so basically, the essence of this structure is, we have, basically if a fund manager engages an SEC attorney, does their own offering, raises money into one LLC or entity, then they can deploy the capital into our deal as one LP investor. So we see that entity as one LP investor. And, because our SEC attorney had recommended this structure to us, and said, "Hey, this could be alternative option. We weren't really looking for this. We weren't having any issues, but the way we see it is that, it can give us more bandwidth in the long run so that we can continue to buy good deals to serve our investors and other investors, who are partnering with these fund managers, and it's compliant, and it's completely separate. And so, that fund manager, that's their business, whatever, however they run that is they're 100% autonomous. And basically, the way we see it is they're signing our docs and deploying their capital and their entity or their fund into our deal. And so, yeah, it wasn't something that we were necessarily seeking out. But it can be, it can be a win-win situation, I think, because, we do what are called 506B offerings. Okay. So our deals are not available to the public. Okay. In order to invest in one of our deals, investors have to have what's considered a pre-existing, relationship with one of the sponsors. And so, that's what we do pretty much exclusively. So, somebody can't just reach out and invest in our deal, and they won't even see our deal. Our deals are not available, online or anything like that. You have to reach out to us, set up a call, and then, we have to vet you, make sure you're sophisticated and things like that. And so that's kind of how that process works. With the fund of funds, the fund manager is also doing a 506B offering, and their investors have to have a pre-existing relationship with them. Those investors will not be able to invest with us otherwise unless we knew them or had a call with them. So that's why it can be beneficial. And I'll give the disclaimer for all that stuff. I'm not an SEC attorney, so consult your attorney because we're talking about SEC stuff. But in essence, that's kind of how it all works.
Absolutely. Yeah. And to kind of touch on what you were saying, basically, if you're going to bring someone on who just raises capital, they have to have a portion of the GP, which means they have to be active, which essentially means you're bringing on an extra partner. You can get too many cooks in the kitchen when you start bringing in people just for raising capital, and you have to give them stuff to do, and they have to be part of the meeting minutes and all of these things. So this structure of fund of funds allows a fund manager to raise money, and that entity stays on the LP side. So it's really awesome. That's basically what Cattani Capital Group has started to do. I come from kind of Hunter Thompson's lineage, which is his main focus as well. So interesting, you guys still do 506B offerings. Obviously, you could probably easily raise just from accredited investors. So what's kind of the logic behind still doing the 506B structure?
Yeah, so we did one 506C back in 2019. This is honestly when people weren't really doing a lot of 506Cs. Like, it was very rare to see it. And so we did one when it wasn't too common. And, what we found was, most of our investors are accredited anyways. But, many of our investors that were repeat investors did not want to invest in that deal because they didn't want to have to go through the third-party accreditation verification, of sharing their personal financials or getting the CPA to fill out the template. So we had a lot of people who didn't participate because of that. And we feel like we have a relatively strong online marketing presence. And we didn't really get a lot of new investors from advertising online or social media and things like that. Because the 506C, for those of the listeners who don't know, it means you can publicly market a deal, but you can only take accredited investors and they have to verify. Whereas 506B, which is what we do, means that you cannot advertise a deal. It's not available to the public. You have to have a pre-existing relationship with those investors, but you can take up to 35 non-accredited investors, and they do not have to verify that they're accredited. And so, for us, what we've found is that if an investor is going to invest with you, they probably want to have had, a pretty in-depth phone call with you and ask questions and understand what you're doing. It's very unlikely somebody's going to see something online and invest, 50 to 100K with you for some stranger they don't know. So for us, we feel like, we've got really good SEC counsel. We're always very aware of compliance with everything that we do. And so we get a better conversion from the 506B, and our investors prefer that, we think. So that's kind of why we've stuck to that and haven't seen the additional benefit of doing the 506C.
I love that. That's such sound logic, especially on the side of not making your investors have to go get the accreditation, which I know that process has become easier as these deals become more prevalent, but still. And ultimately, like you said, having that relationship is so important anyway, because you want to make sure that people understand where their money's going and what it's doing.
Yep. 100%.
Awesome. So we are coming up on time here. I've appreciated this, Zach, very much. But I do have 5 questions I ask all of my guests. It's the final
Sure.
5. First one is, what's the best advice you've gotten from a mentor?
Good question. I haven't really had any mentors, to be honest with you, but I think, one thing that I always tell people is, like, if you have a goal, whether it's with this or with anything else, my goal or my advice to people is, don't listen to anybody who's trying to tell you can't do it, and don't listen to anybody who hasn't actually done it, because a lot of people are going to impress their own negative opinions on you because they feel threatened or they could never do it. So you need to kind of follow your instincts and just stick to what your goal is, and don't take crap for anybody, basically. You know what I mean? Like, just stick to your goal and relentlessly attack it, because a lot of people will tell you you can't do it, or it's not a good idea. And you just need to basically discard those people is my personal advice.
I love that. That's so great. What is it about your career that makes you feel like you're fulfilling your why?
Yeah, good question. I think for me, I'm like super competitive, and I think that I don't know what my ultimate goal is yet, to be honest. But I think that right now where we're at is it's so competitive. We feel like we're competing at such a high level, and the challenges are immense. The stress and the anxiety are always maxed out. And I feel like I thrive in those situations when the pressure is high. That's what I like about this, is that it's very fun. And the competition level is extremely high. So I think for me, I feel like I'm being challenged, like I never was before. And when you're doing that, you're pushing your comfort zone, and you're embracing that fear, which allows you to grow and take on new challenges. And so I think that's the biggest thing, because before I just wasn't feeling challenged and I wasn't feeling fulfilled because I felt like I had more potential. And now I feel like I'm pursuing what I should be pursuing and just pushing myself to the max.
I love that. I can definitely sense that, like your passion, and it feels like you feel like you're doing what you're supposed to be doing. And I love that. And that's what I love about this industry, because I think that's true for most people. They feel like they've found what they're supposed to be doing.
I agree. People come here from different backgrounds, and I think that they finally find what they want to do. You're right. That's a good point. I agree.
Yep. What's your favorite non-real estate or investment related book?
I really like, so there's a few books, I'll just throw them out there because I listen to them consistently. I like Relentless by Tim Grover, and I like Winning by Tim Grover. He was the former personal trainer, Michael Jordan. So I really like the mindset. I also like How to Own Your Own Mind by Napoleon Hill. Same guy who wrote How to Think and Grow Rich, but it goes into much deeper, theories on that stuff. So I think those 3 books I listen to consistently, like over and over.
I love it. Those are great. I'm just writing them down, honestly.
Yeah.
I love book recommendations. If you could have any superpower, what would it be?
I don't know. Maybe if I didn't have to sleep, then I could get more stuff done. If I didn't have to sleep, I could be more productive. If I didn't have to sleep and I could just stay at the same level of productivity, that would be good.
Do you ever stop? Is it hard for you to stop?
It's hard. Yeah. I can't really go on vacation. My wife even knows, like, I just get anxious. Like, I always want to be moving, going forward. So and some people are wired like that, I think. Some people try to say, oh, you need to relax. Well, maybe I'm not wired that way. Maybe I'm supposed to keep going. And I think that's a good thing, if you can feed that. And people talk about balance. I think balance is BS. I think, if you're truly passionate, you should be relentlessly attacking, what it is. And obviously family is important, and there's important things. But there's going to be sacrifices, that you have to make if you want to pursue your goals at the highest level. And so yeah, I think, I cannot relax, just like you.
Yeah, I get it 100%. I just want to keep going. And that's how I know I found what I'm supposed to be doing. Because back when I was doing other things, working for other people, I was like, couldn't wait for vacation. Now it's like.
Exactly. That's how you know. Exactly. It doesn't feel like it sounds like a cliche, like, oh, it doesn't feel like work, but it's true. Like, it doesn't feel like work because this is my life. You know what I mean? Like, what else am I going to do? Like, I'm always trying to achieve the next thing. And that's the exciting, fun part, is going through that. And then you get there and you're like, okay, that was satisfying. What's next? I think that's what fulfillment is. I think if you ever stop, then you're going to get depressed. That's why people who retire, it's just like, they're not happy, I think.
I couldn't agree more. I love it. What's the best way for people to get a hold of you and learn more?
Yeah, thanks, Johnny. You can just go to our website, rise48equity.com. So RISE48equity.com. You can email me, Zach, ZACH at rise48equity.com. You can set up a call with me if you're interested to learn about what we're doing, on the website, and kind of go from there.
Zach, thank you so much. I really appreciate your time.
Yeah, thanks so much, Johnny. Appreciate it. Thanks for having me on.
Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.